Good day, traders. Stacey Burke from Stacey Burke Trading. Just going over and reviewing how I prep for the trading week. I've had a few emails and questions this week regarding how I prepare for my analysis for the week. And I'm going to go over a short video today just explaining what I do and what I look for and some of the other intraday things that I apply if I am indeed going to go to an intraday chart. One of the reasons that I like to do my analysis on the weekend is it just again reinforces taking a very tactical approach so that when we show up at the screen on Mondays during the week, we're prepared. We have an idea of what we're looking for in terms of levels to either take trades or to be keeping a closer watch on for opportunities to enter the market. And as always, predefine our risk and hopefully look for asymmetrical risk reward opportunities with those trading ranges. So what I normally do is I like to just take the blank charts. My gray lines that are on the charts here are the Friday bars. So again, I like to look at the opening range of the week with my end of day trading. I will apply short-term trades depending on the setups, but I like to stay with the trend. And how I define the trend is pretty basic. It's usually higher highs, higher lows, lower highs. But I do look at the first couple of trading days of the week. But technically speaking, what I do look for is a market that's moving quite strongly, and we'll get to that in a couple of seconds. So as you can see with the euro, we've seen levels where the market has broken out, and now I'm looking for possible re-entries into long positions. Again, I'm not looking to make any trading indications here or trading signals. I'm just giving you an idea of what I'd be looking for if I was to enter the market. Currently, this is in the middle of the trading range, so anybody who potentially takes a position here may be looking at getting chopped up as we trade throughout the week. So again, I talk about weekly lows, weekly highs as potential turning points. We can see the market's been making selling off and made a lower high last week. But again, just with the euro, we've had a fairly strong run. If we back this up, you can see the euro's been trending quite strongly throughout the year, and we may be even seeing the potential for a measured move of this whole range up if that market does indeed break out of that range. So again, just looking for simple support and resistance levels. I don't tend to use a lot of diagonal trend lines. I like to look for rectangles or consolidation patterns. If we start looking at each one of these, the dark checkered line is the monthly bar. So I tend to look for ranges where the market will break outside of a monthly range as a rectangle type pattern. And we talked about rectangles. If you haven't studied Peter Brandt's work or Schaubacher, even Edwards and McGee, I'd go back and be reviewing those. Some very significant information that can be found in rectangles. And just to give you like a short-term example of a rectangle, just glancing at the chart real quick, we can see there's an example of a rectangle on the British pound. We'll just get rid of that for a second. We can see that market formed a low inside of a big bar, a topping pattern at the beginning of the month. So again, just talking about our opening range, the first two bars potentially have the high probability of establishing a high or a low in the monthly case, perhaps for the month, and just again an opportunity to predefine our risk. So we've got a bar that we could trade either a break of that bar short or a break of this bar short, with the potential of it hitting this target, and then also extrapolating a measured expansion of that range as a potential profit target. So you can see that the market and the British pound has struggled to come back and fill this level where it broke out from, roughly around the 3670 range. And currently we see that there's a space there, and that spacing can be a strong indication of a market building up positions. And if this market does indeed retest that previous weekly high up around the 4070 range, we could be looking at that British pound market resuming. And if we go back and consolidate this again and look back at the Brexit levels, we can see that the market is now back inside of that Brexit range, And there's a lot of space in there that could be filled if that market does tend to break out and go strongly. There is the high probability that that market has now had a micro trend line break, and if that market does roll over, there's a potential for that market to also potentially go back to retest lows from the previous months. So again, just simple support and resistance. Mexican peso, again, we're inside of a trading range. Aussie dollar has now given us a strong indication of potentially now heading in the downward direction. There is a large gap down towards the 7,500 range if that market does indeed pull back and retest and break down again. There's a lot of space in there where there's not a lot of activity where the market could retest those previous lows. Canadian dollar, US screaming strongly against the Canadian dollar. At this point, I would just be, again, if we back this up and we look at the longer term time frames, we can see there's space for the market still to fill in the long direction and no indication at this point of a market that's about to roll over. Japanese yen has been retesting lows down around the 105.50 range, but again, if we back this chart up, we can see also that there's quite a significant range of that market still down towards the 101 level. So again, just looking at levels that are significant, currently this market is still in a very strong downtrend. Short term, we could see maybe a two-leg or three-leg pullback or retest up towards that 10800 level. But at this point, I'd be still looking to stay with the trend. New Zealand dollar has broken out through that 7,200 level. Currently, I still see this market in a bit of a trading range, but if this market does start to build up some pressure inside of that 72, 7250, 7300 area, we could be seeing the market possibly head lower, similar to the Aussie dollar. The US Swiss franc, again, currently we see that it's broken the neckline on a potential head and shoulders pattern. We could see some pressure build into this upper triangle peak. That market does have room to move to 9,700 and above, but again, at this point, I'd be looking to see that 94.45, 94.50 level to be holding, and a re-entry potentially to see that market move north. Pound yen, retesting that 147.70 level. Not convinced of anything dramatic there just yet. I'd need to see something strong conviction of movement in one direction or the other. Right now, we've seen two thrusts up. We may see a third test to back up to that 14900 level, but I'm still not convinced that we may not see some short-term retest of the lows down at the 14500 level. Euro yen, again in the downtrend. That market, if we back it up, similar to the other yen pairs, we see that there is room for this market to work its way down. At this point, I'm not convinced that we're going to see it retest going north, but again, anything's possible. But we do see that there's resistance around that 130, 175 level, and currently that market's inside of its range for the month. So I'll be looking for either some sort of activity coming off the bottom of that range or something coming up around the 13200 level. So you can see just by stepping back and taking a bigger picture look at things, Monday to Friday I look at things in a bit closer time frame in terms of the Monday, Tuesday, Wednesday, the opening range. I look for some sort of indication that the market is going to, off that opening range, give me an opportunity to enter the market on us. Just coming back to what we looked at here with the Aussie dollar and the Canadian. Currently, I would say these are the two strongest moving markets. And so what I'm looking for is a market that has strength, a market where there's going to give us an opportunity. If you compare that to the euro, the ranges are very tight right now. The market hasn't given us any strong conviction, whereas where we see with the Aussie dollar, we're seeing this very hard sell-off. There's a lot of momentum in those types of candles. The next thing that I would do during the week, if I'm going to go down to shorter time frames to just see if there's opportunities there, is I would go down to my hourly charts. And on the hourly charts, if we look at the Aussie, I tend to look at weekly highs and weekly lows with that opening range as significant levels. You can see that the Aussie dollar came off of a weekly high on Wednesday. Sorry, the red line is the opening of Monday. So on Wednesday, we saw that the Aussie dollar took out retested the weekly high that broke on Tuesday, gave us a bit of a geometric pattern that it broke out of on Thursday. On Thursday, and then moved strongly down. So any type of movement like that where there's that kind of momentum, again, we'd be looking maybe on Monday, the Monday rule, the weekend rule, where we see a market that's moved that heavily, potentially to maybe see that move even lower on Monday before it consolidates into Tuesday's open or even Tuesday's low. It is possible, because of the large spacing here, that we may see some sort of retest somewhere up around that level that it broke out from the previous week. But these are the types of markets that I like to try and participate in. You've heard me say that I've moved the bulk of my trading to end of day. I will still look to these hourly charts for opportunities to enter the markets in strongly moving markets. And as much as I hate to say it, it is also a possibility that I will even go down to shorter time frames in some of these cases to look for opportunities to enter the market when it's moving that hard. So just as an example, on the Aussie dollar, something that's moving this hard, I will oftentimes, if I've missed the initial move, I might back the trade up, just put on some quarterly levels. I'll just flip that around. I don't use Fibonacci levels. I use quarters and extensions of quarter ranges, something that I learned from Bill McLaren years ago. And Friday was a great opportunity for traders that broke the new lows, and as we talked about, markets do usually one of three things. They break out, they pull back, they fill more orders, and they continue on. And in a strong moving market, that's the types of trades that I would look for. You want to look for trades where you can participate in the market and there's not going to be a lot of heat against your position. The second thing that markets do is they break out, they pull back, and they go into a trading range. And then the third thing that they'll do is they break out, they have a false break, they move back into range and move strongly to the other side of the range. And in this particular situation, we see a market that's broken the previous day's low in the Asia session. It's pulled back, and into the London Open, it's retested the highs of the day. Okay, and again, we have a strongly moving market downwards. And then it's given us also, again, talking about rectangular patterns. I'll just draw these in here. These are, again, you want to step back and be able to start looking at things where there's an asymmetrical risk-reward opportunity. We have a rectangle that's formed, it's broken out in the London Open, and then retested and rolled over with the trend, with the strongly moving market as we, after the first few hours of London. Again, we talk about opening range. The first few hours of London potentially has the high possibility of establishing a higher low for the day or for the session. And then again, if we were to do something where we can predefine our risk and have an asymmetrical risk reward opportunity, we have that opportunity here to be able to place a stop somewhere above. Again, we have a smaller rectangle even at the retest of that box. And then we also have a measured move that can take place to retest the lows of the day. And these are the types of moves that you want to look for. Something where you can have a predefined risk, but there's a 3, 4, 5 to 1 opportunity. And in a strongly moving market, when you correlate that with the daily time frames, these markets have the potential maybe to run 7, 8, 9, 10R to your risk into the trade. So hopefully you got some value from today's video, traders. Again, it's one of those things where nothing's ever that simple in live time, but if you step back and start looking at the big picture, you want to look for strongly moving markets where there's potentially opportunities forming. And again, just looking at things like the opening range on a daily market. So we have the gray line is a Friday, we've got Monday, Tuesday, Wednesday. So we have our first two bars, Tuesday's high, Monday's low, and then we've got a bar that struggles to go higher into a previous breakout off of a weekly high. And then you've got an opportunity to position yourself with limit orders where the market will pick you up if it breaks and it has a measured move opportunity for an asymmetrical risk reward. If you're so inclined, you can take these types of opportunities and then narrow yourself down to the shorter time frames if your skills and your time permit. But these are the types of opportunities when you can get down to the narrower time frames, perhaps in a strongly moving market, that you can increase your position size and still maintain the same risk per trade, but you have the opportunity to maybe look at, again, a higher positive expectancy than just the end of day alone. So keep it simple, traders. Step back, look at the big picture, look for that 1 or 2 days a week where the market's going to set up and give you an opportunity to position yourself and let it take you into the market, or give you the highest probability of the days that you want to be trading, to potentially limit your downside, but also increase the opportunities on your upside. So keep it simple, have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.